If we want Bitcoin to grow, Bitcoin has $1 trillion out of 1,000 trillion of capital. Bitcoin represents 10 basis points of all the capital in the world. 99.9% of all of the economic wealth is not in the network. We need to actually convert from 0.1% to 1%, then to 2%, then to 3%, then to 5%, then to 10%. If you attract 10, 20 trillion dollars of that, the Bitcoin network is going to expand to be a $100 trillion network, right? Your Bitcoin goes from 70,000 to 700,000 to $7 million a coin. It's inevitable.
Michael Saylor has never been known for making small predictions. Over the past several years, he's become the face of corporate Bitcoin adoption, the architect behind one of the largest Bitcoin treasury strategies in the world, and arguably the strongest Bitcoin bull on the planet. While many investors still debate where Bitcoin is headed next, Saylor believes the bigger story isn't about short-term price action at all. It's about the largest transfer of capital in modern financial history. According to Saylor, Bitcoin is still in the earliest stages of its global adoption curve, despite becoming a $1 trillion asset and attracting the attention of governments, institutions, and Wall Street giants. He argues that Bitcoin still represents only a tiny fraction of global wealth. In his view, the vast majority of the world's capital remains trapped in traditional financial systems, waiting for a more efficient, digital alternative. And as new financial products make it easier for investors to gain exposure to Bitcoin, that migration of capital could accelerate much faster than most people expect. What makes this argument especially important today is that we're already beginning to see the bridge between traditional finance and digital assets being built in real time. From Bitcoin ETFs to corporate treasury adoption and entirely new Bitcoin-backed financial products, the infrastructure that once limited institutional participation is rapidly disappearing. If Saylor is right, the next phase of Bitcoin's growth won't be driven solely by crypto enthusiasts. It will be driven by pension funds, corporations, asset managers, and investors around the world looking for a better store of value. But how exactly does Bitcoin go from a $1 trillion asset to a multi-trillion-dollar network? And why does Saylor believe Bitcoin reaching $700,000 before the end of the decade is not just possible, but inevitable? In this presentation from Bitcoin Prague 2026, he lays out the framework he believes will drive that transformation. Before we jump in, if you enjoy Bitcoin analysis, macroeconomic insights, and updates from some of the biggest names in the industry, make sure you hit the like button, subscribe to the channel, and let us know your own Bitcoin price target in the comments below. Buy $10,000 of Bitcoin on a regular exchange. It grows to $60,000. That $50,000 profit? You could owe $10,000 or more in capital gains tax. Now do the same trade inside a Roth IRA with iTrustCapital. That growth? Tax-free. You keep the full $50,000. Same crypto. Completely different outcome. iTrustCapital lets you hold crypto in a self-directed IRA, trade 24/7, and secure your assets with institutional-grade custody. You can also hold gold, silver, and stake certain assets. Real U.S. customer support. $100 bonus when you fund through the link below. In crypto, structure beats timing. Every time. Now, let's hear Michael Saylor explain why the biggest wave of capital migration may still be ahead of us.
What's happening right now is that digital credit has exploded in the last 12 months. Digital credit is $11 billion asset class, almost a $12 billion asset. 12 months ago, it was zero. All of that capital is flowing into Bitcoin. And so as STRC and SATA, those are two digital credit instruments, as they grow, capital flows to Bitcoin and Bitcoin dominance increases. The digital money business is embryonic, but we're starting to see hundreds of millions of dollars, soon to be billions of dollars, flow into digital money built on digital credit. The people buying the digital money are selling stable coins, or they're selling other crypto tokens to buy digital money. If you want a crypto token that generates yield right now, you're either buying a Solana or an Ethereum or some staking token in order to get yield in the crypto economy, and those people might swap that for digital money backed by Bitcoin, or people are buying Tether and Circle, which are backed by currency equivalents with zero yield. And there's about $325 billion of that. People are starting to swap that for digital money. And as they swap stable coins or crypto for digital money, that will drive digital credit, and that will drive digital capital, and that will drive Bitcoin dominance. So digital credit and digital money are actually killer apps that are strengthening the Bitcoin network right now. And all of those things, I think, are bullish. I think this is it's a really good year for Bitcoin and its emergence as global digital capital. It's like that's the consensus in the world. I don't think the other people in crypto would even debate that right now. I think that there was a debate 5 years ago, about is the flippening coming and will somebody else challenge Bitcoin for dominance or monetary dominance. But I don't really think people think that anymore. I think that right now it's clear that Bitcoin is one. It is the dominant network. It may take 10 years for the entire world to realize that they all need a digital monetary network. But I think it's clear there's not anybody else that's going to rise to challenge. It was, Amazon and Apple were both very clearly winners in 2010 to 2012. But it took somewhere between 6 and 10 years for global consensus to form that they were essential to the civilization. So oftentimes you see the dominant network form, and then it's 8 years before everybody on the street or the mainstream media will agree with you. Now they would say that. I think we're here with Bitcoin. So let's talk about how we make Bitcoin better and how you make money off of Bitcoin. If we want Bitcoin to grow, Bitcoin has $1 trillion out of 1,000 trillion of capital. Bitcoin represents 10 basis points of all the capital in the world. 99.9% of all of the economic wealth is not in the network. We need to actually convert from 0.1% to 1%. Then to 2%, then to 3%, then to 5%, then to 10%. I don't think we'll get to 100%. I think there will always be other forms of capital, but I do think that building that bridge and building those channels for money to flow from the conventional economy to the Bitcoin economy is really critical. And that's what all the capitalists are thinking about.
At the heart of Saylor's thesis is a simple but powerful idea. Bitcoin doesn't need to replace every asset in the world to create extraordinary returns. It simply needs to continue attracting capital from existing financial systems. What he describes as digital credit and digital money represents a new category of financial products designed to channel traditional capital directly into the Bitcoin ecosystem. Instead of investors choosing between cash, stablecoins, bonds, or speculative crypto assets, they're increasingly being offered Bitcoin-backed alternatives that combine digital efficiency with monetary scarcity. What's especially significant is that these products create new demand without requiring investors to become Bitcoin experts. Pension funds, corporations, family offices, and institutional investors don't necessarily need to hold private keys or navigate crypto exchanges. They simply need access to financial instruments that provide exposure to Bitcoin's long-term growth. In Saylor's view, every new product that makes this process easier acts as another pipeline connecting traditional capital markets to the Bitcoin network. This helps explain why Bitcoin dominance has continued strengthening even as thousands of other digital assets compete for attention. The debate about whether another cryptocurrency might eventually replace Bitcoin has largely faded among major institutions. Increasingly, Bitcoin is being treated as the foundational monetary layer of the digital economy, and if that trend continues, the next question becomes much bigger. How much capital can ultimately flow into the network?
Now we come back to my 10 by 10. What you see is that there's a lot of money stranded and pooled in a lot of places on this matrix. If you want to get that capital to flow into Bitcoin, you have to create an instrument, a product, a service, an asset that will actually facilitate someone buying that asset, selling an existing conventional asset, and then having the capital flow through to Bitcoin. Obviously, if we attract $10 trillion of that, those numbers, by the way, are trillions. They're all trillions, $200 trillion. If you attract $10, $20 trillion of that, the Bitcoin network is going to expand to be a $100 trillion network, right? Your Bitcoin goes from 70,000 to 700,000 to $7 million a coin. It's inevitable. So our exercise is plug in into the capital markets, empower all of the conventional investors, and power up the Bitcoin network and empower the entire crypto economy. So I want to talk about companies that are doing this today. And my first point I'd make is this is capitalism. It's a Darwinian struggle. There are millions and millions of companies. You have companies that are succeeding mightily, the SpaceXs, the Teslas, the Googles, the Apples, the Nvidias of the world. You're always going to have the winners. We've got some winners in the Bitcoin universe. These companies have created $50 billion, $100 billion, multi-$100 billion operations, and so they happen to be in the Bitcoin space, and they've gotten scale. You've got a lot of challengers. I don't have room to list all the challenges on the chart. I just listed a bunch. They're all companies that are growing, that are building products, that are wanting to become $10 billion, $100 billion companies. And they're in a market competition with each other and with the conventional incumbents. And their success will be a function of their own execution and some luck and the competition and maybe some regulation. You know, this is the Cambrian explosion. And all of you have been around for the 17 years. You know there are losers. You know, Mt. Gox didn't work. Silvergate failed. Silvergate and Signature failed not for any fault of their own. They were assassinated. They were murdered by a set of hostile regulators. And that happens, right? There are going to be companies that are actually, all the Bitcoin miners in China shut down by the Chinese. It wasn't a business failure. It was just a political risk, and they got caught in the crossfire of politics. You'll have some of these companies that fail because they probably had poor financial practices. They made poor decisions. They were mismanaged. Maybe they were over-levered. Maybe they were overstretched. It happens. I don't want to dwell on the failures, except I want to say we'll see 10,000 companies do this. They're not all going to succeed. If we waited to be guaranteed success, we would never start the journey. That doesn't mean we shouldn't do it. And the fact that 100 companies try and only 3 succeed or 1 becomes a mega winner doesn't mean that it wasn't important for the world for it to happen. We track about 1,400 companies right now that are doing some kind of Bitcoin capitalism, all types, exchanges, wallet, device companies, product companies, finance companies, network operators.
What Saylor ultimately presents is not simply a Bitcoin price prediction. It's a framework for understanding how capital moves through financial systems. Throughout history, new technologies have repeatedly attracted wealth away from older, less efficient networks. Railroads, electricity, the internet, mobile computing, and cloud technology all followed a similar pattern. The winners weren't necessarily the technologies that appeared overnight. They were the networks that steadily absorbed more users, more utility, and more capital over time. In Saylor's view, Bitcoin is following that same trajectory. The market isn't just valuing a digital asset anymore. It's increasingly valuing a global monetary network that operates 24 hours a day, 7 days a week, across borders, without relying on any single government or institution. As more financial products are built around that network, Bitcoin becomes easier to access, easier to hold, and easier to integrate into traditional portfolios. Of course, as Saylor points out, not every company participating in this transformation will succeed. Some businesses will fail due to poor execution. Others may face regulatory or political challenges. But the broader trend remains intact. Innovation rarely moves in a straight line. Thousands of companies may compete, but only a handful need to become major winners for an entire industry to advance. That's how technological revolutions have always unfolded, and that's why Saylor remains so confident. His argument isn't based on speculation alone, it's based on the belief that global capital will continue seeking assets that are scarce, liquid, portable, and increasingly digital. If trillions of dollars eventually flow from traditional financial markets into Bitcoin-backed products and services, the implications for Bitcoin's long-term valuation could be enormous. Whether Bitcoin reaches $700,000 by 2030 or exceeds even that target, Saylor's core message remains clear: the migration of capital into Bitcoin may still be in its earliest stages. If you enjoyed this breakdown of Michael Saylor's Bitcoin Prague presentation, please consider supporting the channel by hitting the like button, subscribing, and turning on notifications. Every like helps more people discover our content, and every subscription helps us continue bringing you in-depth analysis from the biggest voices in Bitcoin and macro investing. Thank you for watching, and we'll see you in the next video.